Yo, what's up, guys? Welcome to the most confusing trade recap ever. Um, I was so let's start from the beginning. Um, we had news today, two high impact news, which is wait, let me pull this up. So January 22nd, and we had unemployment claims coming out at 14:30, and then at 16 we had core PCE price, which is also high impact news. For me, market opens at 15:30, so these news actually were half an hour after market opened. Now, my bias was really strong because before market opened, we filled this weekly gap on Nasdaq and also on the S&P. On Nasdaq, we pushed a bit more above it, but S&P was like inside of it, and yeah, we filled it kinda. So I was really bearish because I thought, all right, we also took out this liquidity on Nasdaq, and I was like, okay, definitely we will get a move downwards, and I will take a short today, right? And then what did I see? We had a bearish SMT divergence right here. Bang. S&P 500 made a higher high while the Nasdaq made a lower high. Now at this point, like this is on a 5 minute chart, and this was nearly right after market open. Oh, this was yeah on yeah, okay, yeah, this was right after market opened. And then the problem was I was out. The problem was I was outside and I had to trade on my phone. So I didn't really mark out a lot of confluences. I just like literally like waited for like two or three confluences and I just hopped in the trade. And this is what the trade looked like. So the first trade was on S&P 500, which I actually lost. The entry wasn't that bad. The problem was just we didn't have the SMT yet. So the first trade was kind of, it was a bad trade. It wasn't based off of many confluences. We had this fair value gap getting invalidated, so disrespected a bullish fair value gap, and then that was basically the only confluence I had. But the second trade was way better. Um, we had I took it on Nasdaq, and we had a where was it? Wait. We opened the trade. Let me check first. We opened the trade at 1446, which is, oh, okay, yeah. I'm seeing the problem right here. So 1446 is right here. Let me, yes, there's the, it was something like this, right? So this is where I opened the trade on Nasdaq, and this trade was way better. Why? Because we had this fair value gap. No, which one was it? We had, yeah, we had this fair value gap getting disrespected, and then we tapped inside of it again after that, and then got a clear reaction off of it, and then I entered basically, and then which was on, should have been on this candle, but my internet was lagging, so I got a entry which was way later. So the trade should have actually looked like, let's say like this. Bang. So the take profit, the risk reward would have been a bit better, but who cares? Still banked the trade really good. So it was based off of SMT, liquidity sweep, fair value gap getting disrespected, and we like price going back into the disrespected fair value gap, and then getting a clear reaction off of that. Pretty simple, pretty nice. Also we had this retrace, which also counted. Bang, retrace to equilibrium, right? This is the Nasdaq trade. This is the better trade. The first trade, the S&P one, I it was just a bad trade. Like the bias was right, but the I went into it way too fast. I rushed the trade basically. So yeah, that's basically it for the day. Really clear bias, and that's what saved me. And then yeah, we made some profit. $5.26. I didn't actually write down the percentages. of what I risked, but I would say it's around 0.5, 0.12, 0.10%, something like that, like really, really low. So, no. Yeah, 0.12%, something like that. Yeah, that's right. So 0.12% risk around something like that on both of the trades. Yeah, we made money. It's good. The second trade was really, really good. My bias was really, really, really good, and there ain't much to say anymore. Crypto, not much happened since last time I didn't take a trade. I'm planning on a trade right here, but yeah, that's something that I will talk about when the trade actually triggers. And I have to go. Right. Yeah, so that's it for today. Hope you guys enjoyed. Hope you guys learned something, I guess. Like, stay calm in the markets. Don't rush trades. Just wait for the right opportunity. Like, you've seen it right here. My bias was really, really strong. I should have just waited for the right entry. Yeah. Oh yeah. The risk reward on the second trade, on the better trade, was 1.16, and on the first trade it was, on the bad trade it was 1.35, and on the second trade I targeted equilibrium. I don't know which equilibrium. It was probably this move. Oh shit. Or was it 0. Bruv, I don't know what I targeted on the second trade, but I know I targeted some kind of equilibrium. That's all I can say. Wait, oh, I probably checked higher time frames and then. Oh yeah, okay, that makes sense. Yeah, okay. I targeted this equilibrium move right here, from this down to here, right? Yeah, okay. It was. Oh no, it wasn't. What the hell? I don't know what I targeted. I targeted something. Bro, that's crazy. I mean, there isn't much of a problem because this right here is all the fair value gap, so I guess I just, the idea was that I target target equilibrium, but I like use you I don't know which one it was. I don't know why I can't find it, or if I drew the, oh, this might have been the problem. Yeah, okay, I drew the equilibrium wrong actually on the second trade, which was, yeah, okay. Yeah, that was my problem. Okay, all right, who cares? I mean, I would have probably targeted the 0.618 if the risk reward was way too bad, and put behind entry at 0.5 at equilibrium. So yeah, that's basically it. Hope you guys enjoyed. Hope you guys learned something. See you guys in the next one. Peace out.